Today, I'm going to review an article by Matt Carter in Inman News that goes through Jerome Powell's press conference after the recent Federal Reserve meeting. And then I'll give you the most recent update from Altos Research about what's happening with single-family homes here in Montgomery County, Maryland. So let's jump right in. All right, so let's take a look at this article. Saying the U.S. banking system remains sound and resilient, Federal Reserve policymakers approved what might be the final rate hike in their campaign to fight inflation. And equally significant for mortgage rates, the Fed said that it will also continue to withdraw the support that it had provided to mortgage markets during the pandemic, letting $35 billion in mortgage-backed securities and $60 billion in treasuries roll off its balance sheet each month as part of the quantitative tightening plan launched this summer. One of the things that certainly has impacted a lot of thinking about what's happening with the economy is what's happened with Silicon Bank and Signature Bank and some other banks over the past 2 weeks. So after the failure of Silicon Bank and Signature Bank, there were some doubts that the Fed would continue the rate hike campaign that it began last year. Policymakers sent a signal that they believe the banking crisis has been contained and that they remain determined to bring inflation under control. But Chairman Powell said that policymakers will take a wait-and-see approach to hiking rates again, which makes sense if you think about it. There's a lot going on, and they really need to see what's happening. For them to predict what they're going to do 2 or 3 months when you have all these things happening would be kind of silly, even though the press wanted him to do it. It was interesting to watch the push and pull in the press room. They were just trying to get him to commit to something, and he wasn't having it. So it's too soon to determine the extent of these effects, and therefore too soon to tell how monetary policy should respond. As a result, we no longer state that we anticipate that ongoing rate increases will be appropriate to quell inflation. Instead, we now anticipate that some additional policy firming may be appropriate. So what he said was that because of the turmoil in the banking sector and the fact that the banks may tighten up on lending and credit standards, that may have the same effect on the economy of putting the brakes on and slowing things down as raising interest rates would have. So they're going to just take a breather, see how things play out before they make their next decision. So the Fed has 6 more meetings this year, and the so-called DOT plan, which shows how high members of the Federal Open Market Committee think that interest rates will need to go to curb inflation, suggests that the Fed will implement one more 25 basis point rate this year. Of course, people predicting anything is, got to be careful. People were predicting all kinds of things before the Fed started jacking up rates, and practically none of them came true. Mike Frantontini, chief economist for the Mortgage Bankers Association, characterized the Fed's latest move as a doveish hike. As the commentary and economic projections suggest, we may be at or near the peak Fed funds rate for this cycle. So we'll have to see how things play out, what happens with all the stuff that's going on in the banking sector, and see exactly what's going to happen. Frantontini said that the MBA is sticking to a forecast that mortgage rates are likely to trend down over the course of this year, which should provide support for the purchase market. The housing market was the first sector to slow as a result of tighter monetary policy and should be the first to benefit as policymakers slow and ultimately stop hiking rates. So the MBA's weekly survey of lenders shows that homebuyer demand for purchase loans picked up last week for the 3rd week in a row as mortgage rates eased. Although they're still substantially below where they were last year. They have improved. And here's a chart that shows what Fannie and Fannie and the Mortgage Bankers Association predict is going to happen over the course of the next year and a half. So if you look at Q1 2023, right here and there, you can see that they're predicting 6.1 or 6.4% as the rate, and rates today were right around 6.5. So we'll see. The CME Fed Watch tool, which monitors futures contracts to calculate the probability of Fed rate hikes, put the odds of one more 25 basis point increase in the federal funds rate in May at less than 50%. Of course, I was hearing in the press that this Fed Watch tool was bouncing all over the place over the past week and a half as the meeting drew near. And so Powell emphasized that any future increases would depend on labor market and inflation data, and that they'll closely monitor incoming data, carefully assess the actual and expected effects of tighter credit and the labor market, and see how it all plays out. In a note to clients, Pantheon Macroeconomics chief economist Ian Shepherdson said, in short, the statement, policy action, and dots signal clearly that the Fed is nervous. Well, there's a lot going on. Then they talk about the plot graph and all that stuff, and Shepherdson ends up by saying that, indeed, no one knows. And that's the case. You know, all these people they're paid a lot of money to predict, and who knows what's going to happen over the next few weeks until the Fed's next meeting. So now let's look at what is happening with the local real estate market here in Montgomery County. Now we'll hop over to the Altos Research website and look at the most current data for single-family detached homes and what's going on with active properties right now. If you'd like your own Altos Research page, make sure you stick around to learn how you can get access to the most up-to-date real estate statistics for any zip code in the county or anywhere in the US for that matter. All right, we'll start where I usually like to begin, which is with the Market Action Index. As you can see, it's at 59, and that's increased in the past 30 days from 55. And inventory is held pretty steady at 338. Again, this is for detached single-family homes here in Montgomery County. Let's move over to the real-time market profile and run through these statistics. Let me get that. There we go. And so we'll start looking at about the past 30 days. First, we'll look at median list price. You can see that it was $840 and now it's at $864. So it's moved up a little bit, whereas the median price for new listings has moved down from $765 to $724. Average days on market, this was sort of interesting. I noticed that there was a pretty big spread between average and median. So average days on market went from 89 down to 85, so it ticked down just a little bit. But if you look at median days on market, let me get that right. There we go. It moved down substantially from 49 days to 28 days. Price decreases have taken a big dip in the past 30 days. They've gone from 26% down to 17%, and even bigger dip if you go back to December, they were at 40%, and now they're down to 17%. So price decreases have in the past 90 days have basically been cut in half. And if you look at price increases over the past 30 days, they've stayed pretty steady, but again, going back a little further, they've increased substantially from about 2% back in December up to 5% now. Relisted properties, so these are properties, relisted properties have come back on the market maybe because the contract fell out or because the listing expired and it was put back on the market again, usually within 60 days. So you can see that relisted properties are up at just under 30%. Inventory, which is the big story these days. Inventory, if you go back to February, middle of February, it's been pretty steady. But moving back to December, you can see that single-family homes, there were 606 of them, and that now it's down to 338, and it's moved up a little bit. So back in early March, it was 282. So inventory had gone down by 50% in roughly 3 months. Rent is not something that I keep an eye on particularly. But if you look at the market action index, again, you can see that in the past month, it's moved up a little bit from 54 to 59. And going back to December, it was at 49. So the market seems to be showing signs of life as the flowers start to come out. But there is this potential, call it headwind, of what's going on in the financial markets. Interest rates seem to be moderating, but if the consumer is concerned about what's happening with the big picture of the economy, then they may pull back. I'll be keeping an eye on things and letting you know. If you'd like to see my most recent video where I talk about what every seller needs to know to prep their house for putting it on the market, click over here. And if you want to subscribe to my channel so you get updated whenever new videos come out, click over there. Have a great rest of your day, and I'll see you on the next one.